we're going to do kind of a lightning round on what is actually happening in this climate economy that we've been talking about. And we've got 4 people here who are involved in the climate economy. John Mousseau, right to my left. We got 2 Johnsons, Brandon Johnson and Bill Johnson, and Al Browder right there. You can look up their bios in the program. Brandon Johnson, I'm going to start with you. You do solar installations.
Actually, it's Bill, but yes.
What did I? Oh, I mixed up my Johnsons.
I don't think I do.
Okay.
Not that I know of.
Temporary Johnson confusion. Sorry. Bill, tell us what is happening as we've got all this money from the Inflation Reduction Act coming in that we heard about before. Everybody's kind of getting on this bandwagon. Are states and cities and businesses and residents ready for what's coming?
I don't know if they're ready, but it's happening for sure. The growth in the renewable energy sector is pretty massive. We see over the next few years, just an incredible increase in the number of projects that are going to get done. There's new programs. One of the things we didn't talk about in the IRA before is the direct payment option that's going to be available for government and not-for-profit entities to actually get the 30% tax credit paid directly to the not-for-profit from the U.S. Treasury. So that's a huge change. That's going to be available to municipal governments and stuff. But the biggest issue we're facing today, right now, in terms of growth is actually worker availability. We have a massive shortage of skilled workers in the industry. Kind of one of the questions that I always ask folks that don't quite understand what's going on is, well, how many electricians do we have here in Sarasota? Is it, 200, 500, 1,000 electricians that, work across the community? Well, okay, it's somewhere in that number. How many solar contractors do we have in Sarasota? 20? And if you drive around and look at all the houses in our community, most of them don't have solar today. And so if we're going to transform our economy and build out this infrastructure, we literally need a tenfold or even more increase in the number of workers, that have the skills and capabilities to do these jobs. These are high-paying jobs. They are high-skill jobs. The work that we do is tough. It takes a lot of knowledge and a lot of training, but they're local jobs. They're jobs that you cannot outsource. If you are, building out, a solar PV system and a battery system on someone's house or someone's business or here at the university, you can't outsource that job to China. And so we need a revolution in worker training, to bring these people into these kinds of programs, because there is tremendous value available for those folks that are looking for those kind of opportunities.
So Al Browder, you told me you're having a similar problem. You do this kind of work, and so what's going to happen? Where are these workers going to come from? Is this government's job? Is it the private sector's job to make sure people are trained? I mean, we've got labor shortages supposedly in many parts of the economy right now. Is the pay going to be there to attract the people to do this work, and so on?
Well, we work with local governments, county governments in designing and implementing their projects that, for us, are fighting sea level rise literally right at the line where the water meets the land. So we are looking for engineers, and I'm sure I'm not speaking only for my own firm, but for every other firm out there. So it's universities like USF, their engineering programs, their environmental programs, putting out people with that solid background, but with the understanding that they're going to be working in the field directly implementing projects for these communities. We're probably not in as dire state as that in terms of the number of people we're looking for, but in terms of finding engineers who have the right background, that full background training, and then more specialization in the field is going to be really difficult. So for us, it's the universities. It's where we need to find our people.
So they're not in the labor force yet. You got to hope they come through the pipeline.
Well, we can, trade our people back and forth amongst firms, but that doesn't really add to the pool.
Right.
And with communities these days, the rash of storms that we've had that you've heard about this morning, there are communities in the state of Florida who have never taken any action to do anything on their coastlines, either on the open coast or along the bay shorelines. And they are just now at the point like, oh my gosh, we got to do something. We should have been getting going on this 5-10 years ago. And it's people that work in our industry who figure out what the problem is, design the solutions, do the permitting, and then actually work to implement the jobs with contractors.
So Brandon Johnson, we were talking before, so we've heard here about the need for setting aside land as part of the solution here, so water can go where it needs to go. You deal with this, and all the land is built, it seems like. So how do we do that? How do we get more land, to help with rising water levels?
Well, one thing I heard earlier today was Elizabeth Moore, who said that she bought her ranch as a gift to the watershed and to wildlife, and that's an incredible gift. That's a gift to the community. I have a couple slides. Do you have those? Just a concept that I wanted to bring up. Not those. Not my concept. But the idea of habitat, yeah, go to the next one. Habitat migration is an important concept to have in mind here. And this goes to what you're saying. Seagrass, mangrove, salt marsh, all of these habitats have their environmental niche that they grow in. With rising sea levels, they have to adapt. They like a certain depth, they like a certain sun exposure, all of that, salt tolerance. Well, if you have a what we call like a soft developed shoreline, it gives room for those habitats to migrate upslope. But more so what we have in most of our coastal communities is a hardened shoreline, and that puts a stop immediately to that habitat transition. So go to the next slide. And I apologize, I'm from St. Pete, and I serve on the Habitat Restoration Consortium of the Tampa Bay Estuary Program. So I have a St. Pete-based example, but this can be transferred, to Sarasota, which you guys have an amazing estuary program down here with Dave Tomasco. I encourage you to contact them as well. But this is NOAA's sea level rise predictor. It's a tool online. You guys can go and look at this. But this shows the inundation, and you see the blue colors, and that's the time frame on the side is 2100. But you can see there's a lot of St. Pete that isn't there anymore in that time frame. This is a NOAA intermediate high model, which gives about 5 feet of sea level predicted for 2100. Go to the next slide. This is a map of the habitat restoration opportunities for St. Petersburg. And you can see it's just different mosaic, just different types of habitat. But basically, this is showing opportunity, habitat restoration opportunity. And the pink is developed hardened shoreline. So that limits the opportunity. Well, one of the things, to your point about where do we find the land, one of those issues, if you go back to the sea level rise, some of our land's not there anymore. And it was brought up earlier, the words weren't spoken, but we were talking about a concept called managed retreat. And that's the idea that we continue to build on the coastline. The idea, it was brought up earlier about going vertical. How do we accommodate this growth? You go vertical. Well, is that the smartest thing to do in a coastal high hazard area? The concept of managed retreat is a dirty word in a lot of places. And that means people lose their homes, we lose infrastructure, we lose businesses. But we can't ignore the reality that sea level rise is coming, and not to speak about the precipitation, and you can't just put a higher seawall because we've seen the precipitation and the higher rain. We don't want to create a bathtub on the back side of that seawall, right? Well, go to back to the next slide on habitat. We know that natural solutions, nature-based solutions, we've talked about those breakwaters, mangrove habitats. We know that nature-based solutions are extremely effective at adding to coastal resiliency and protecting our lands. So there's an idea that can be a shift. How do we take that unfortunate but perhaps inevitable managed retreat at whatever level that ends up being. 2100 is a long way away, but we have increments in between. How do we flip that and find opportunities to implement some of that habitat and coastal restoration opportunities where maybe we've lost that land, but we can build a marsh or a mangrove habitat that's going to protect that coastline further from what's behind it. It'll take a monumental shift in how our towns look and the structure and infrastructure and everything that goes along with it. But to Bob's point of finding opportunities in this, there can be an opportunity in an effective means through nature-based solutions.
When it's late in the day and you want to keep the audience awake, just show a map of all the houses that are going to be underwater in 30 years. Hopefully not mine. Everyone's looking at right. John Mousseau, I feel like I called you John Russo before. If I did, take it as a compliment, a famous philosopher. You look at the financial markets. You have some insights about green bonds. We talked about ESG investing a little bit before. That's a form of ESG investing. Is it worth it?
When you look at the municipal bond landscape, where you've seen a fair amount of what you call ESG issuance, so environmental, social governance, last year, in a year that had about $380 billion of issuance, about 11% of that was for green bonds.
What is it? Give us a short definition of a green bond.
An idea of a green bond is it accomplishes one of those goals. It doesn't have to differ in terms of credit quality. So, for example, if the state of Massachusetts, they could be issuing general obligation bonds. They're full faith and credit just to run the government. They could also issue green bonds with the same credit backing if they were building, for example, a solar office building for the state. Now, there's absolutely no difference in how someone gets paid back on that because the state of Massachusetts is on the hook either way. The real question is, from an investor standpoint, does somebody pay up in terms of accepting a lower yield for that green bond? And what we saw in the last couple of years was they were coming what we call a little tighter to the market, a little lower yields. The net result of it has been they've kind of underperformed the market, which is a different way of saying that you kind of have to pick and choose. And the fact is that investing in green bonds should be something that someone wants to do for what they're accomplishing, and not that it's going to necessarily provide a superior return. And I would say that one thing that's has come out of last year, where we saw interest rates rise across the board, of course, because of what the Federal Reserve was doing and bond yields backing up, is that particular deals that come to market now have to provide additional yield. In other words, you kind of have to tell a story. So, for example, a couple weeks ago, the state of New Jersey brought a bond deal of about $160 million for a wind farm, and something that they had never done before. And they paid they brought it in the taxable bond market, but probably gave you almost 0.75% more than they needed to, but they sold the bonds, and of course the bonds performed terrifically. So, you know, now that you've entered into a higher interest rate environment, you're going to be able to have a little more discerning of what's a good green bond and what's not.
So if anybody has a question, fire it up and raise your hand and see if you can get the microphone. Meanwhile, I'm going to ask the panel a question. It seems like the way we think about the climate economy, and even the fact that we use this term, the climate economy, it's as if it's distinct and different or separate from the whole economy, and even in Washington. So in 2021, Biden signed an infrastructure bill. And then in 2022, he signed a green energy bill, as if they're not the same thing. Is this a distinction that needs to go away?
You mentioned the climate economy, and when Bob brought this topic up, at first I was a little taken aback by what actually was meant by that, because it's sort of like you're out chasing this idea of only pursuing environmental projects. And someone mentioned earlier, and it might have been you, Rick, that not to sound crass about it, but it doesn't really matter whether you're pursuing it or not, because you're going to get it dumped in your lap to great excess, whether we like it or not. And so, again, finding the capacity to manage all of the problems, and then ultimately, yeah, certainly there's money to be made across the board, but, you know, professional engineers, professional, you know, environmental scientists, we have an obligation to help the communities that take on these bonds and pursue these projects. We have an obligation to help them parse it all out. They're getting so much information. It's like they're being asked to eat the whale all at one time, and they can only eat it one bite at a time. So we have to help them. Okay, you got to do this first, or everything else is not going to matter, and then kind of prioritize it all.
So let me go to this question. The hook man is behind me, I see. So briefly, please.
Yes, this is for Mr. Johnson. Has there been any advancement on ultimate disposal of the large storage batteries?
So that's a very good question. The answer is it's in the works. When you actually look at battery technology, and I'm saying across not just storage batteries, but just all kinds of batteries, it turns out that lead acid batteries are the #1 recycled item on the planet. They actually do a better job of recycling those batteries than pretty much any other object, consumer manufactured object in existence. And the issue right now is that the lithium-ion batteries that are being produced today, they have a pretty long lifespan, right? We installed the Tesla Powerwall. It has a 10-year warranty. We've been installing those batteries for about 7 years now. So even the first ones of those are not anywhere near their kind of end of warranty period. So part of the problem we have right now is there's not actually enough volume of like end of life batteries to actually start a real recycling industry. But absolutely, once that volume starts to grow, there's already a whole raft of startups that are working on intelligent recycling projects and things like that, not just for batteries, but also solar panels. If you think about what goes into a solar panel, it's aluminum, glass, and silicon wafers, and some copper. Those are all fully recyclable. And as we get, again, the lifespan of those products is 25 plus years. So if you go back 25 years, how many solar panels were installed back then? Not that many. So we need to kind of get through this first generation of end of life of those products before we really start to see an explosion in the recycling business. But absolutely everybody in the industry is looking towards recycling as the long-term kind of future and actually creating almost a circular economy where the batteries reach their end of life and then are recycled back into new products.
Last question over here.
Mr. Russo, question.
Mousseau. That was my bad, yeah.
So, green initiative of a portfolio of green sustainable stocks and bonds relative to just a normal distribution of stocks and bonds, which one is more favorable now versus 10 years ago? My understanding 10 years ago, it was a shaky environment to actually invest in sustainability, et cetera, because of the success and failures. Now, a lot of it is more successful than not because of the pull strategy of demand.
I would agree. It has become mainstream, and I don't think the differential is that much. We saw that heat map earlier, right, on basically insurance risk. Right there is probably for Florida the map of where you're going to see green or say climate issuance. When you think about Dade County, Miami in particular, having to issue debt to finance things like filtration systems, pumping stations, mediation systems, et cetera. That's going to there, and listen, it's going to be enough of them that it's going to come at a break to the market.
So moving forward, we could push the concept that if you have stock portfolio A versus B, then if you want to be conscious as far as pulling demand, you would want to invest in sustainable corporations.
Sure, at some point, because as we saw from the map, it's only going to be
Good,
growing.
thank you.
Brandon, last word to you.
I just have a follow-up to that. When you frame that question, I assume you're talking about monetary return, A to B. Which one has the steeper curve? I would argue that what we've talked about is the climate affects every industry, everything out there. So what's your time frame on that investment? A sustainable business that is adapting to climate change and observing risk of those climate change may be around longer than that one that's chasing that short-term profit a little bit. So what's your angle on that curve also has to pay attention to what your endpoint on that curve is.
I wish we could go longer, everybody. I encourage everybody to try to catch our panelists off stage. They could talk for a long time about many of these topics, but anyway, thank you to our panelists. Back to Bob.